You are live.
Okay, I'd like to call this meeting to order. Roll call.
All right. Members are asked to signify their presence when the name is called. Ms. Braverman.
Here.
Mr. Lavariere. Mr. Sharma. Here. Mr. Castell.
Here.
Mr. Johnson.
Here.
Mr. Schulman. Excuse me, Ms. Schulman. Pardon me. Mr. Susarski. Mr. Trister. Here. Mr. Mankey.
Here.
You have a quorum.
Got it. Okay. Any public participation?
No.
Seeing none, we can move on to the next order of business. Administrative matters. So we're here just to pick a agent of record. We did. Who we send this? How many we send these? We sent 3 out, right?
Yeah, there were, what happened is we issued an RFP, we got 1 response. And so you're interviewing that firm tonight to determine if you're comfortable with him or not. There is no minimum requirement for the firms that we have. The other firms probably did not put in because USI's fee is fairly low, 17.5. Now, John
For 3 years.
Susarski did identify that they made a mistake on their proposal in that they used the old years. That is a mistake. They are keeping their fee the same, but they intend to, it's $17,500 for each of the next 3 years, not the past 3 years.
Yeah. Of the proposal.
Yeah, see, it's got 80.
Right.
Yep.
Okay. So how long does it go? 2022
2025.
Okay.
Hey, Jeff, I'm embarrassed.
So they made a mistake on the years?
Yeah. So
Was
it
this
should be.
available to us earlier?
It should be
Oh, yeah, it should
20,
be
20, whatever.
2022,
Whatever that is.
It was emailed to you, the day they came in.
Yeah,
I missed that. All right, well,
oh, right here, if you go down here, so they just had the wrong years. It's
Yeah,
gonna be
yeah,
22, 23.
that's what I was killing you. is that-
Not a
you
big
see
deal.
There we go. Questions. So our administrative matters are we have questions that I was asked to bring in that we used basically the last time we had our- And if you're in agreement that we want to ask these questions, we can do that. And then the question then next becomes who asks the questions of USI? And that's something we want to determine before they come into the room.
So anybody want to take question 1?
And again, I can ask the questions if you like, so that you can focus on the answers.
Just ask the question. That works for me. Instead of-
Okay, that's fine.
That's acceptable, but I'm willing to do that if you like.
So the goal here today, just so we're all clear, is there's only one bid.
Mhm.
So we have an option. We either take this bid if we like to answer the questions, or we say, look, we don't like it, and we go back out. We can still go back out and try this again.
That's correct.
When's the contract up? So there's a deadline, a time constraint
Their
here.
contract expires June 30th. but
So we
they
are
have
kind
to
of a
place
little-
the town's insurance or make a recommendation to the town council before then. So
Right.
really, it's at the end of May.
So we really have some time constraints here, because we have to go back out, and I'm not sure if we go back out, we would even get, if we didn't get any people to bid the first time, however, they come back out second time. So, but we have that option. We don't have to, just because it's one, we don't have to accept them. I thought it was a better idea to, even though there's only one, we should still go through the process.
Yeah.
And do the questions and not just say, well, you're the only bidder, you're it. So we
This
still
way,
should,
if you do choose to accept them or make a recommendation to the council to accept them, you have some comfort with them and their response, and these people are familiar with who you and with you and so forth.
CSI.
And similarly, if you're uncomfortable with them, or there's something that you don't like about them, then this is the time to bring that out before any recommendation is made to the town council, so.
so whatever we do tonight would then go to the council, and the council has the final,
Right.
decision.
Right,
Frank?
what I would recommend is, what we're gonna do is we're gonna bring them in, we're gonna interview them. We're gonna say, thank you very much. We're gonna ask them to leave. And then you can debate, and if you wish to make a decision this evening and a recommendation to the council this evening, you can do. Or if you are waiting on other information, you can certainly delay that decision. But I've told USI that we expect to be making a decision, if not tonight, then in short order.
If you only have to the end of the month, end of May,
Yeah, I would think you would want to make something fairly quickly.
because you only have,
This spring.
you only have 2 council meetings, so you have to get this by the council meeting, the last council meeting in May, which is pretty close. It's, it seems like a long time, but
Right.
the way this year's been going by, it's not, we don't have a whole lot of time, so.
I'm just gonna say, I'm gonna excuse myself. I didn't know you were gonna be here, so I'm glad you're here. I didn't want to step on your toes as liaison, so I was showing up thinking I would be the Democratic liaison, but because you're here, I'll excuse myself unless anyone has any objections to that.
No, not at
Okay.
all. Technically, you're not a member of the committee.
I know,
That's
but
all
I didn't want to be
That's all
rude and get up, but I
Okay.
came because I didn't know you'd be here and I was just
Okay.
trying to be a liaison.
Okay.
But
We've
it's-
done the same thing for where we're going.
So it's the Department of Redundancy Department, so
Okay.
you're more than capable and
right.
certainly more than capable I am on
Go
this
home.
stuff. So
Enjoy
I
your
wish
night
you all
off.
the best. Thank you very much. And have a good night.
Okay, so any questions? Any discussions?
Very good to me.
Or do you want to take, if you want to take a minute to read through this, if you want to take a couple minutes, we can just read through this.
Could I just have a,
Yeah, just give us a couple minutes.
somehow I missed seeing this in my email.
That's okay, that's okay, Clark, I read through it and it's like reading Latin to me, so, which I don't know.
It's the same as last time. Pretty much.
No, but okay, yeah, that's fine. I'll be all right. There was one,
Going to charge is the same as they've been charging us. Is
That's
that-
correct.
Right, so it's no increase.
$7,500 has been their fee for this 4 years, and it's going to be their proposed fee for the next 3 years, yes.
Yeah.
Yeah, it's a pretty good deal.
Yeah, it is a good deal. Use these guys?
Yes, it's supposed to be for a 3-year term,
Right.
but somebody messed up on the years and kept them on for an extra year, so.
Right.
I use COVID as an excuse. but in reality,
We've had these people 4 years, the 4 years prior.
Okay.
And we really,
This is like the second re-up or whatever?
Yes.
Okay. Okay.
Jeff, before 4 years ago, USI replaced the prior carrier or the prior broker.
I believe USI.
Or was it earlier?
Over the second term, this is their second term that's coming to an end.
Okay.
And before that, so this would be 7 years ago now,
Right,
it was RC Knox and Company.
right, okay. Yeah, I was on the committee then.
And Joe Peak retired
Right.
and
Yeah.
the person who replaced him was probably not as good as Joe.
we're probably gonna take these people on that's at the end of the 3 years, they'd be here for 10 years. But we have a good relationship with them at this point, right?
Yes, we have a good relationship with them. I'm happy with them, Lou.
Very much so.
I think we're both,
And their fee you said is lower than the other guy from
Yeah.
other people's out there.
Yeah, so I mean, the fees,
Right.
fees are important, but. Any other questions?
Okay.
I think that's why you didn't get any heating proposals, because people can't go lower than 17.5
Right.
and
And it's
make
also
money,
hard.
and make money on this account.
So it's
So,
also hard bidding on against the incumbent too, because
Yes.
we're already happy with them,
Right.
and through the industry, they know we're not unhappy, so
Right.
I'm sure they all talk to each other.
Seeger came and interviewed 4 years ago.
Yeah.
And I suspect they didn't put in this time. I know 4 years ago, they asked me, who's your incumbent and are you happy with them?
Yeah.
And I encouraged them to come anyway, so that the committee would have a choice. But they didn't even choose to put in this time, and I also contacted, there were 2 firms from out of state who expressed an interest, and Gallagher from Glastonbury is the other firm that received a copy of the RFP that you got tonight.
And they didn't.
They did not choose to, although I did hear from them, and they expressed interest initially, but I think once the addendum went out that stated the fee,
They said that.
But it's good to know that they're there. I mean, they're a very good firm, as you know. I mean, nationally, I used to do a lot of work with.
but I think you're gonna pay for that.
Yeah, well, right, I understand. It's just good to know that there's somebody else that,
Yeah, there are other options should you choose to go that route. Yep.
okay.
All right. So they've been professional, responsive.
USI has, yes, in my opinion, yes, they have.
That's important.
Any other questions?
This question for Lou, how was
Are you happy with USI? I mean,
Oh, very much.
So they do
pretty
a very
good.
good
You
job
call
for
them
us.
up. I mean, any issues with them?
No problem at all.
All right.
And there is a question on here about risk management and safety issues, and we rely on USI rather than Kerma for those services. All right, I'll get USI. Clark, are you all set? Do you need a few more minutes
No, I'm
or?
good. I'm fine.
Okay, very good.
We'll just ask the questions slow. If you want any clarification of an answer, just jump in.
Yeah, if you're ready to go on, it's okay. Yes, you're only, right? Yeah, right, you are, that's right. Let's see if it's still available, so. Oh.
Hey,
Now, I should tell you, this meeting is being recorded, it's a Zoom meeting, even though we're in person. There's a Zoom over here, so, sorry.
Hi.
Hello. So I know.
All right. All right.
I don't think we're.
Introduce themselves if they wish.
Very nice, John.
Sharon Braverman.
Sharon, nice to meet you, Sharon.
Nice to meet you. Hi, Bill.
Chairman, nice to meet you.
John.
Timmy.
Tim, nice to meet you.
Nice to see you. Sharon?
How are you? David Johnson. David.
good to see you.
Yeah, nice to see you.
Oh, that's fine. Your name?
How are you?
How you doing? David Johnson.
Nice
to meet you, Bill.
Somebody else.
I said at the table.
Oh, you see? Who do I got?
Oh, all right, I'll put mine down.
No, no, it's-
That's your. You can sit whenever you wish.
So Bill, the same guy, huh?
It's behind the table, I feel like. Because I like to lean on the table and talk.
Yeah, sure. This is open, so,
Who is Jim?
yeah, Jason.
That's fine.
Yeah. And I did notify the committee that on the fee, that your proposed fee is unchanged for the next 3 years. So if you wish to expand on that, you may do so. Other than that, I'm going to ask you if you could identify, and maybe Bill, you might want to jump in on this. If you can identify for the committee what it is that you do as the agent of record for the town of Newington.
Hi, good evening, everybody. Old faces, new faces. Good evening. My name is Bill Carrera, and USI for the town of Newington for the past several years. COVID kind of got in the middle of, meetings. Glad to see, that people are gathering again, after this, look at each other, meet with each other. So having said that, my associate here is Jason, we're related. And so what in USI, we're a national broker. We're located in Maryland, Connecticut. We have 125 folks on staff in our office. We're likely the largest physical insurance broker in Connecticut. We have a number of towns, cities, school districts, transit districts, housing authorities. So it's a specialty of ours, in our office, not only in Maryland, but nationally across the country. We have specialists, different parts of the country where, we gather quarterly, just to talk about conditions in the marketplace. So it's a very active engagement, with our staff and ourselves. For me personally, I've taken the opportunity this year to retire. It's been, after so many years, you need to pass the baton out to folks. But having said that, what USI has done with my stealth numbers of my judgment is that they like to keep us on board, in terms of as a consultant to assist our people, staff, with the kind of institutional knowledge that we have. That,
Mhm.
sometimes you develop that sixth sense that you can, guide and teach and, assist our folks in terms of, the process. So I think that worked out well, for me personally. And my son Jason, who has the, pleasure of having him step into that position for me, working together as a team. So that's sort of it from a USI standpoint. I know Jeff and I and Lou, we have worked together over the past many years. So we come to know the community quite well. We know what the issues are, what's come around, certain challenges that the community has, from an oil spill not too long ago. The community had to, other things that pop up on our radar, whether it be claims or, changes in operations.
So can Jason tell us a little bit about his background?
Yeah, absolutely.
Okay,
I was joking, we haven't invented the Vulcan email yet, so that's, it's
Okay.
the importance of having institutional knowledge of people like my father. My father and I have been a father and son team for about the past 5 years. And I worked at another firm for about 5 years before that, started right out of college. And I took the LSAT, so I was going to go to law school and decided not to. And this is kind of where I ended up. And I loved it. It's been my passion ever since. So realistically, and from the very beginning of my career, I've been in the public sector space. So it was just natural when I transitioned to USI, I started working with my father, that it was just a natural trajectory for me to go. But as Bill mentions, we have a public sector and social service specific service team in our neighborhood office. We don't have our service members, have service members who are going to be working on contractors at the same time as working on municipality. It's a very focused and very niche exposure and group exposures. So that's why we're focused as a group in that our account managers are very much focused on only municipal risks for that reason.
And we're going to ask you to please describe your experience both currently and in the past with retrospective rating programs.
So the town is unique in that the retro program with PERMA, you're actually the only town with PERMA that still has this program. That's not a bad thing. It's just the nature of the town has just been in this program for many years. You were with a retro program with Hartford many years ago, and had transitioned when Hartford had pulled out of the municipal public sector market. It was just a natural transition because they had that retro program at that time. And retro programs, similar to self-insurance, similar to those other types of programs, it's not like you can just skip around. You move from self-insurance to retro or vice versa. You still have claims you have to fund for, which I'm sure there are claims from the Hartford that the town still has to fund for. So in our experience with retro programs, we have a number of our public sector clients nationally and locally here in Connecticut that do a retro program because it's it's not quite as we think of the risk continuum. Self-insurance is on one end of the spectrum. You have your typical flat penalty cost on one end. Retro is, probably one or two steps before self-insurance. So it provides some budget stability without the full risk of being fully self-insured, like many of your other towns similar in size to Newington are. We've actually are in the process of reviewing the retro program with PERMA. There were a couple of adjustments made over the last 18 months that we're just reviewing for accuracy, because there was typically the difference between the first and second adjustment is very small. In this case, there was a larger adjustment that was needed, so we're in the process of reviewing that with PERMA now. But all in all, our experience with these programs are great.
terminology is sometimes difficult in our business when we throw these terms around. So people, you're familiar with self-insurance, that's something people recognize, you know, where, you know, you insure yourself, self-insured, we put money aside.
And in certain communities, such as our neighbor in West Hartford, is self-insured. And we looked at self-insurance a number of years ago and just determined that that was not in our best interests at that time. We weren't quite large enough. And at a population of roughly 30,000, we're still there.
And so you're on the cusp of your size, whether or not self-insurance makes sense or not, but Jason mentioned risk. What that means is that when you're self-insured with workers' comp, there is a tail of claims where you can have claims from 10 years ago that will come to this day. You have a claim, you know, from someone who came down with cancer because of Roundup. Okay? And now all of a sudden, that Park and Rec person, you know, worked for you 20 years ago, and now we have a workers' comp claim, you know, against you for, you know, for Roundup for disease. So workers' comp claims have a very long, what we call exposure tail. And when it comes to self-insurance, you have to fund for the anticipated claims you're going to have, plus what we call IBNRs, incurred but not reported claims that you aren't aware of that you have to set aside claims for. And then you buy an excess policy, you know, and you claim over $1 million. The excess capital will fall into this. It becomes, from a budgetary standpoint, pretty difficult for a lot of communities to manage those costs. And you know how they fund it. There's some good years and there's some bad years. Like health insurance. I don't know if you're self-insured or
Partially self-insured.
okay. So you know you can get some really good years and they got really well and they're all really smart.
Yeah.
And then the wheels fall off and you're not so smart. So you can't really predict those things. You know how it happens. Workers' comp will blow off. You know things that happen. So having said that, with this retro, the town pays a deposit premium. And then 18 months after, there's an adjustment made, you know, against the claims, that's what you paid in. Then there's some factors that are applied to the claims. And either you owe money or you get money back. Then there's a final adjustment, you know, 6 months after that, where there's a final adjustment made. So basically, 2 years, you're done. There's no more liability on behalf of town.
Versus self-insurance where the tail could be 4, 6, 8, 10 years. So the 2
Could be,
years
yeah.
gives that layer of insulation that you wouldn't have with self-insurance.
Exactly. So I don't know if that helps you with
Yeah.
terminology.
I just have a quick question. Would you be able to, or Jeff, share with us the copies of the last couple adjustment statements?
Not tonight, but
Yeah.
yes.
Oh, yeah, no, in the future. The reason I asked, I used to do this as my business, so I enjoy looking at the.
And again,
for others
the
who
most
may-
recent adjustment is being
Being done now.
evaluated by USI as received from Kerma.
I just wanted to mention to other people who don't know me on this committee that if the concept is new to you, I'd be happy to
And every couple of years.
help explain the way it works.
Absolutely, no, it's very helpful. And every couple of years, we always, for example, Kerma has now a large deductible program that's unique in that they do not require collateral. So typically, if you have a deductible program, you would have to provide either a letter of credit or you'd have to put up monies to establish a bank account essentially that you would then take money out of to pay claims. Kerma does not require that collateral. So we've reviewed that program in the past. And so every couple of years, 2 to 3 years, because markets change quite frequently, we regularly assess because we don't just take for granted that because we determined something 10 years ago, it's the same today. And markets, especially in the public sector space, are rapidly changing, especially when you look at cyber. So every 2 to 3 years, we always look to evaluate other program options and the comps and kind of focus of that. And again, not a bad thing that Newington's the only town in this program, but it's our job as realtors to make sure that the programs that you are currently are best in terms of providing coverage and at the most reasonable cost.
And that leads into our next question, which is, other than Kerma, what other markets would you consider when shopping Newington's coverage?
So the one I would say, so there is a benefit to retro, but I would say the downside is that municipalities that are self-insured have a little more flexibility with markets because carriers like Travelers, for example, they are one of the only carriers in Connecticut that can provide both a liability and workers' comp option. Carriers like Trident, for example, also known as Paragon, they do not do workers' comp outside of the guaranteed cost, which is you pay X premium and claims are covered. So, so that would not be an option for Newington because they don't have a workers' comp option that would be comparable to what the town has now. So we do currently have a submission into Travelers to have them pre-underwrite and evaluate what they could offer the town in terms of coverage. But the one other thing to consider as well is that Newington is unique in the fact that you guys have a school bus fleet. And there's only a small handful of towns that we're aware of, like Big Shelton, Sterling, and maybe a couple others that I'm thinking of that might be bus fleet, but it's uncommon for that, at this point, most have decided to contract that out. And in addition to that, you also have $25 million umbrella limit. And when we benchmark you versus other towns, I mean, understandable, you have the 25 million as a result of the bus fleet, which is something that we would fully recognize. The school bus facilitates is something you can never buy enough insurance for. But typically, a town of Newington size without a bus fleet, typically you see around the 10 million range. But the fact with the higher umbrella limit also hits because in terms of the insurance market, excess liability coverage I would put next to cyber in terms of the two most volatile coverages currently in the marketplace. Vermont, despite the volatility we've seen, has continued to put forth rate lock agreements between 0 to 3%, which is very generous considering what we're seeing outside of carriers, the typical stock carriers such as Travelers.
So to kind of expand on that a little bit, this goes back to history. When we go back 20 years ago, in insurance markets in Connecticut, we get questions a lot from our other compatriots about Connecticut as opposed to the Midwest, as opposed to New York, where we have county forms of government. We have insurance companies that come into our office and they went, we want to get into the public entity sector of Connecticut. We think we can make money on this. We're like, great, we've heard this before, so what's your deal? And so, oh, we love towns, well, we don't like schools. We don't like schools. That's schools. Well, other parts of the country, the schools are separate. Although Connecticut are part of the towns. Mostly speaking, you have regional school districts, smaller towns, like where I live, Worcester County. Oh, we don't like schools. You have fire, police, oh, we don't like police. Really? So no, I'm not making light of this, what I'm saying, but look at Connecticut and New England, right? You have a lot of exposure in one year. You have all this stuff. Insurance companies get rid of it.
Yeah.
And when it comes to the umbrella markets, 10 years ago, you asked me, Bill, when's the last time you saw an umbrella? Never saw an umbrella over. Now, umbrella is like taking your home loan, right? Once you exceed your 500,000, right? House carry a million on it. So rarely would ever see it grow. And the umbrella pricing was cheap. Oh my God, we had towns that had $65 million coverage out of Fairfield County. And what ended up happening is the courts, the awards that the courts receive from the juries come fraction. You know, where the awards are social justice based, not necessarily monetary based. By social justice, I'm not say, well, there has to be some restitution. You know, there has to be something. There's some. If someone's hurt here, we have to compensate them. Yeah, but we have a policy. The policy doesn't cover this problem. Guess what? So what's happened over these years is that we've seen a lot of police, schools, unfortunately, sexual abuse. They go back many, many years. So what's happening is the umbrella markets are difficult. And Travelers, who is a great market for us, doesn't not write umbrellas with sexual abuse of molestation. Like, so we have to go outside of Travelers to buy umbrella. Travelers doesn't like schoolwork liability. Oh, that's good. Somebody 10, 20 years ago, there was some claims Travelers didn't like it. So we have to carve that out. And it's fine, we can do that. It's all, we can put it all together. It's one. So long story short is, for those of you who aren't in our business, so to speak, those of you who are, I apologize because you know all this, but those of you perhaps who are not, I just want to make sure that we kind of get the context for what we look at as brokers. When we look at a town like Newington, we want to make sure that, you know, we're covering the town the right way, you know, for today and into the future. We don't guarantees. Travelers is an A++ rated carrier.
But at the same time, the reason why we left the Hartford and went with Kerma was because Hartford did not offer sexual molestation. And they did not offer corporal punishment in schools and protection against that. So there were reasons why we left one and went to the other. And this sort of dovetails into my next question, which is, what is your opinion of the current state of the municipal insurance market in Connecticut?
So I know my dad touched on a few of these points, but in biggest challenge for municipalities is excess liability coverage. You know, he alluded to the fact that Travelers, which is the largest carrier for public sectors in the country, does not write excess liability for towns with schools. And actually, we had quoted last year, because Kerma presented a sizable increase for the excess liability. We had quoted and attempted to find alternative placement for that coverage. And we came up and Kerma at that time was still the most competitive because Kerma, as a direct writing insurance company, can go direct to their reinsurance, meaning the carriers that insure Kerma, to get the coverage versus brokers who go to the commercial market. So Kerma had at that time an advantage, being a carrier, being able to get the coverage and place it directly. So when we go out and try to replace, you know, a coverage for Kerma as a carrier, that's one of the biggest struggles where we might be able to find Travelers can save on the underlying coverages, but then we go to place the excess and it's 4, 5, 6 times. It's going to eat up any of the savings that we might find on the underlying that we would then have to get on.
Again, in 2005, when we switched from the Hartford to Kerma, we reduced our umbrella liability policies by, I mean, you were the agent, $100,000 at least, over $100,000. Yeah.
But there's a difference now. You have to understand who Kerma is. But for those of you who know Kerma, who doesn't know Kerma? Who doesn't know? Okay, so Kerma is a risk pool. You're not an insurance carrier. So insurance carrier like Travelers has the best AM best rating. And they carry that rating in their standard forms. You know, they sparks financially. You know, Kerma is a risk pool. Full-time insurance company, which means it's member owned. So the members contribute premiums, you know, and it's a not-for-profit. So it's a not-for-profit company, you know, Kerma each year deals a dividend, right, every year. And that dividend could be sizable, $30,000, $50,000 to return, which is their excess. You know, so they think there's no profit here. So instead of having a dividend and shareholders take money, you know, that money gets returned back to the members who are towns, and schools, not growth. So they are not profit. You know, Kerma reinsures themselves against catastrophic risks. So, you know, Kerma's financials, we look at them, are great. You know, reinsurance that they buy against their assets, but they're still not an insurance company. Okay. So in the event that there's a failure of a risk pool, the members have to make up the difference. So that's the difference. There's no guarantee fund as a risk insurance carrier. So there's no guarantee fund for property and liability.
And one of the things that this committee looked at very closely was Kerma's reserves before we went and became a member with Kerma. And that reserves are sizable. I will say, or they were, I presume they still are, so.
Their reserves increased 40 million last year alone.
We're not here to make any editorial comment.
Yeah.
We're just making a point of fact.
Right.
That's all we're saying.
If we continue, may I ask, I'm sorry.
Yeah.
Do I ask through you or do
You can ask them directly, Clark, that's okay.
I forgot what the.
I'll hit you the gavel if you.
So, trying to find the word. Would you be able to give us copies of Kerma's balance sheet?
Their financials?
Yeah.
Yeah, so that's pretty similar to
Um,
Are you online? Okay.
Oh, then I can call
Yeah, yeah, they are online, but I can certainly get a copy as well.
it. And there was one year when
Yeah, actually, if it is online, if you can identify how one would look at that, and I'll pass that information on to the members. How's that? All right.
Well, all Kerma provides you with is an annual report.
that's what I meant, annual report.
And take it.
Yeah, I'm sorry. That usually is sufficient.
Right, so you can go on Kerma's website as well, if you.
Oh, no,
interested in going through there. I'm just saying, if that's something that you can go on, we'll provide that.
I'd like to see what their reinsurance, not necessarily all the details of the program, but who their main reinsurers are.
So I don't know that they'll share all that information. They're guarded with some of that information because they don't want it to be public knowledge. But I do know that there is some of that information. I just don't know to what extent that I'll be able to provide that, but I can get whatever I can get my hands on.
In general terms, I'm mostly interested in the catastrophe, in the
I know they use
the umbrella.
National and Lexington, like we use now AIG as,
Correct.
but I'm sure they use at least other carriers, like, well, those are their two largest ones. So what was the first?
The reinsurance,
Safety National.
with the reinsurance treaties changed July 1, so, you know.
No, I understand. Okay, thanks. Oh, one other thing, record of dividends over the years.
From
Would that be hard to produce?
Yeah, we've gotten dividend checks, at least the last 2-3 years. They go into the insurance reserve fund. So
I didn't know that, so I haven't been here for a couple of years.
again, they go to pay our deductibles.
Yeah.
So,
Okay, good. No, I'm glad to hear that.
On average, it's typically 5% of your premiums. Some
Yeah.
years it's been lower, but I think on average, I would say 5%.
Okay, that was my next question. Thank you.
Yeah.
Okay, thanks.
But I guess to finish off on what I was saying, in terms of the market, it's one of the hardest insurance markets we've had since 9/11, without a shadow of a doubt. And while There are certainly that does not mean that that PERMA is the only option for the town. There are other options out there. The hard market doesn't stop us from exploring those options. But we always like to maintain expectations that because of, as my dad explained, with how PERMA is set up as a not-for-profit, they have some advantages in terms of what they can do with pricing versus stock carriers who, again, like a travelers who have shareholders and things.
Now, I'm going to ask you to summarize the risk management and safety services that you're going to provide to the town. As you know, we rely on you for those services as opposed to KERMA. So if you could tell the committee what services it is that you can provide and have provided to the town, that would be helpful.
So leading up until COVID, we had participated regularly in safety committee meetings. And that was something that we were actively involved in, obviously until COVID. But going forward, we have two portals that we make available to town and for all of our clients. And the first is our e-risk hub, which is specific to cyber, ransomware training, phishing training, updates on the cyber market, what's going on. So we have the ability to set our towns up with an account that can provide these type of cyber training resources that you may otherwise have to pay an outside firm for. We provide those services at no charge. The second is our risk management center. And our risk management center is where, when we look at, for example, we would look at your claims, we were to see that you were trending, for example, in auto accidents. We have the ability to work with you through the risk management center to set up specific training to specific departments or employees that would target those causes of loss in an effort to keep them at bay. So loss trends obviously come and go. Some of what may be a trend today might not be a trend next year. So that's why our active involvement in viewing claims, providing training is always something that we're mindful of. And PERMA also provides a number of trainings as well. So if we feel that it's appropriate, PERMA, I believe, is doing on-site trainings now since now the COVID restrictions have lifted. So we will coordinate with PERMA if we feel that there is something that the town and community would benefit from. We will coordinate with PERMA. Hey, can you bring someone on site to provide this training in this department? They're having some issues with these kinds of claims, and we'll facilitate that on the town behalf.
And the last thing is that claims. We don't get involved in the day-to-day issues of claims. Claims are reported by Will and Jeff, to KERMA. But once in a while, an issue will arise. And I think the most significant issue was just 3 years ago with the oil spill. There was the town garage. So there was a leak of a pipe that went into the river that resulted in a considerable expense to the town. And what KERMA has is they buy on behalf of their members, and will cost members a pollution liability policy, which provides $1 million of pollution coverage to their member towns. And at that time, the insurance company that KERMA used was having some issues getting the check released. So we were able to facilitate that process on behalf of the town to get the check released. So there's things that we do that come up to the surface of some significance, and that's sort of one of the ones that is most memorable, at least in my mind.
Yeah, I think actually recently, we've answered some questions with the Newington Public Schools with some California burger effects, right, and addressing what the liability, which there is none in that case. But our role as your brokers is to be your advocate. So when you do have an issue with a claim, that we will respond and advocate for you to get a result that's most beneficial to the town.
Now, what changes in coverage limits have you experienced with other governmental entities that might be appropriate for Newington? You've mentioned your cyber insurance program, so there might be some changes there that might be appropriate for us. And again, I'll let you start on that.
Absolutely. So, in addition to the excess liability market, as I'm sure you're all aware, the cyber liability market is in a state of extreme flux. A lot of this is in response to some of the cyber terrorism we're seeing from Russia, in response to the war in Ukraine, and of course, it's been going on for many years before that. And as a result, for many years, we had placed a cyber liability policy, which was very, actually, in terms of cost, very expensive. It was good policy form. And over the last few years, even despite the volatility of the market, it's if we benchmark versus our other towns, the premium coverage is still very good. For this coming renewal, the carrier that writes it on risk is not renewing the cyber liability policy because their underwriting guidelines have changed and that their revenue minimums, which we say revenue, we really mean your budget size, it's 150 million. And my understanding that the town's budget, which is inclusive of the Board of Ed's 136 million change.
Yeah.
So we attempted to, because it's not far off the 150 mark, so we asked for an exception, but because it's an underwriting guideline, there's no wiggle room. So we've been working with Mr. Barron and others in the town to obviously there are other markets available that will hold this coverage. What we've been dealing with this for the last 3 years or so. So we have the process down pretty solid. So we know based on what we receive back on the applications for what you have in terms of cybersecurity, network security protocols, we'll be able to best match you with the appropriate carrier. And one thing that we're careful to do is that we don't just pass off the applications to the carrier and doesn't just say, here you go. What we do is that we review the applications with you to make sure that we're positioning the town in the best possible light. So that first impression, as soon as that submission hits the underwriter's desk, it's best in class. Because you don't want to have the underwriter come back and ask questions when they could have been addressed at the front. Because once that doubt creeps into an underwriter's mind, it's hard to get it out. So we work hard, especially with cyber in such a volatile market, to make sure that we're making the Newington look as good as possible. The market get as possible terms and improvement.
And just to let you know, the cyber liability policy is with the town manager for his signature. Once he signs it, I'll be passing it out to USI, and then I'll be most likely bringing that issue. And also another issue that has come up before the committee in past years is unmanned aircraft coverage.
Yes.
And the police department is looking to become involved with unmanned aircraft now. And so we're going to need some sort of coverage for that. And I'll be approaching you. And there again, I anticipate that you'll be bringing that matter before this committee as well.
With Kerma, so for years, for a couple of years, we had actually placed a specific drone liability policy. Drones, I was just talking with someone the other day, 5-6 years ago, drones were just the new thing, right? Just like the iPhones, their phones now, it's just sort of like, oh my gosh, right? And drones are the same thing. You look at the technology today. But Kerma will offer liability and property coverage for the drones. So it was unnecessary for us to place that policy. So once Kerma made that available, we let the drone policy elapse and included that coverage with Kerma. What I will say is, with respect to the drones, if it's specific to educational use in the classroom, the person operating the drone does not need to be 107 certified, which is the FAA certification for being a drone pilot. Outside of that, the operator needs to have that certification and be licensed in order to be covered under the liability. For property, we would schedule the drone on the policy just like we would at your vehicles, your fire trucks, your police vehicles. That way, if it is damaged, that we would make sure that the drone is covered for its full replacement cost.
Well, again, we can discuss that further. getting back to this interview, do you see any gaps in Newington's current coverage and limits, especially given the change in the environment with respect to exposures from perils such as active shooters, COVID-19 and the like?
So the only two things, so the Kerma program is comprehensive, but there's two areas that we've recommended to past committees that I'd like to bring to your attention as well. The first off is, as you mentioned, active assailant coverage. So if there was a incident either at town hall, one of your schools, maybe at a public works garage that involves an active assailant, there could be costs that are incurred for death benefits, crisis management, anything that would fall under that for therapy. Yes, mental health services, and that would not be covered under a standard liability. If the town was sued for an active assailant event, if you failed to have proper, let's just say a proper functioning security camera, right, you would have liability coverage for that. The purpose of the active assailant coverage is to cover the ancillary costs that you would incur as a result of the event, and that's what that policy like that would be for. They're not expensive, and you can, and some of our clients have just purchased them to cover just the schools. Some of them have purchased them to just cover town hall. So we can be strategic in how we want to place that coverage, but it's something that is available to the town, and we'd be happy to get an indication to let you know approximately what it would cost. I would say if I were to benchmark $1 million of coverage would be between $7,000 and $12,000 for a ton of sites, roughly. The second area is that Kerma specifically excludes is fiduciary coverage. So if you have, for example, your 403B plans. If you were seeing an uptick in excessive fee lawsuits in that regard, because sometimes the plans like the 403Bs are kind of a set it and forget it, and not intentionally, it just happens. And so what's unique about if you were to serve on a pension board, just like a planning and zoning board, your personal assets are insulated by state statute. So you can't lose your house if you were to be sued as a board member of a town or government.
That's good, because a number of the people on this committee are also on the town's pension and benefits committee.
Yes.
And so they're gonna have a very active interest in what you're saying.
Yes. So if you were to serve on a nonprofit board, for example, let's just say the Boys and Girls Club, and you were sued and there was no coverage or not enough coverage, then your personal assets could be exposed. When you're serving on a state government board, by state statutes, your personal assets are immune from that. However, that doesn't insulate the town from incurring liability expenses in defense of the claim.
And so it's also acting within the scope of your duties.
Right.
Okay, so that's just, you don't get blanket immunity.
Right.
Yes, exactly.
As a member of my planning and zoning committee, I just, there's a sort of box that you launch in a box.
Yeah, there's no insurance for criminal acts. But in that sense, the fiduciary is the other area that is excluded by the criminal program. In some towns, they understand that their board members are exposed personally. So that's ultimately why sometimes they just decide not to purchase it and they just decide to self-insure for it. Other towns are like, you know what, again, the active assailant is not very expensive. The same premium range of the active assailant would be applicable to the fiduciary. Again, it's rated based upon the plan assets. So it's something that for our permanent clients that we recommend as well, just because it's specifically excluded under permanent policy.
Yeah, and the other thing that we watch for is communicable disease exclusion. I mean, I think right now, I hope we're, COVID is old, but it's still here, right? Insurance companies vary greatly, their coverage of COVID for liability. So by that I mean, if the town gets sued because someone said I got ill, I was sick, because of practice of the town or commission, so a claim is brought against the town, the school was covered for that. here. There's no exclusion in the policy. July 1, we don't know. So we haven't seen anything that causes for concern until July 1. That one, with other markets, it's always an issue, becomes a question mark, okay, on whether or not that is going to be covered by them or not. This is not workers' comp, workers' comp is different issues, the liabilities.
When I got my COVID-19 shot and I turned out I had an allergy to the medication and I died. So my estate is going to sue the town who gave me the shot and so forth and so on.
But you have, right, so even in that case, even if the town did have a communicable disease exclusion, that would fall under your criminal liability policy for your public health department. Your public health department has coverage liability for services within the scope of their duties, for things that they, for example, providing vaccinations. The only issue is we've seen sometimes where public health departments will bring in outside help to do that, and that's where you have to be careful and making sure that any outside parties you bring in, for example, the vaccine clinic, that party, that third party provides a town certificate of insurance, and that there's an agreement in place so that if that situation does occur, that vendor could then hold harmless and indemnify the town so that there's protections in place for that sort of exposure. But getting back to the earlier point about communicable disease and COVID, historically, that I'm aware of with our clients in Connecticut, and we communicate nationally in the public sector realm, we have not seen any successful liability claims for COVID against really any municipality because there's no burden of how do you prove exactly where you contracted that disease. And so that's been really the reason why we've really not seen any. And so while initially we were concerned about these exclusions because anywhere else, every carrier across every industry has now either a pathogen exclusion or a communicable disease exclusion, virus bacteria exclusion. But it's again, we just haven't seen these claims because there's no way to definitively prove how it was contracted. As my dad was mentioning in the workers' comp side, Governor Lamont issued executive order 7JJJ, where workers' comp COVID cases are under presumptive rebuttal, which typically for a comp claim, the onus is on the employee to disprove that a workers' comp claim is work related. So presumptive rebuttal signed by Governor Lamont put the onus on the employee to prove around. So essentially what has happened is that there has essentially been no way for carriers to combat these claims because, again, for the same reason why we haven't seen successful liability claims, we haven't seen successful people fighting workers' comp claims for COVID because of that exact reason. So, but again, for the town's sake, in terms of COVID, we haven't seen really any issues in that regard. So.
And the final question is something that we ask at every interview. Do you have anything else that you want to share with the committee? And this is your chance to tell us about great things that you've done, if you've got an Olympic athlete working for your firm, or if you've got an axe murderer or a serial killer working for your firm, this is your time to tell this committee, and no one can say they weren't asked. Eh?
Well, I'll say this. So on a more personal note, my dad and I have been a father-son team, and as he's mentioned, we've enjoyed a great partnership with the town because we tell you what you need to hear, not what you want to hear, and that's really kind of our ethos as a firm, in that it's easy for anyone to come in here and sell you something. But really the core of who we are as a firm and why we're so successful in this space, the public sector space, is we're your trusted advisors. We're not citizens. We take what we do very seriously. And in a case that we gave with a pollution claim, we are here as your advocates and protect ultimately taxpayer funds that you use in general operations of the town. And we take that very seriously. We don't take that lightly. So, I, even as, in the coming years, my dad's not going anywhere. Rest assured you're in good hands, and, we want to thank you for, trusting us for this, that was nearly 15 plus years that we've had this relationship, and we look forward to continuing on.
And also having heard that from Jason, we'll also tell what the bad news is. So, the bad news, there's always like, Kerma offers a 3-year rate lock, which is nice, but you may not like the terms. It's like, well, I work 7%, I'm gonna work 10%. And, sometimes the bottom line is there's just no way getting around it. So, ultimately, the facts are what they are. I've gone beyond time where I want to sugarcoat it out of disrespect to people that I deal with. So out of respect, I want to make sure we all make sure that you get the straight story from us. And, so you have all the facts, but how we pull it out of us. So, you'll know exactly where things stand and what the issues are. Okay, well, again, we want to thank you for your time. And if you have any final questions?
Yeah. Is there any new legislation coming down the pike that might influence us next year or the year after that you are aware of?
So there's, I'm on the Big I Government Affairs Committee.
Uh-huh.
So I kind of get a little bit of a sneak peek on some bills that are being introduced into the House that could affect municipalities. There's currently, and again, it hasn't even gotten out of committee yet, it's not even on the floor of the House yet, but there is talk of possibly expanding the statute, which provides PTSD coverage to first responders, to expand to all employees, all town employees,
Okay.
or a fire, or a teacher, or a public works person could claim PTSD coverage, under workers' comp. Again, I've spoken very much against this. So I think the spirit of that to have PTSD coverage for first responders, because it's expected within their line of work. But outside of that, in terms of legislation, the only other thing I have concern about and I'm keeping a close eye on is the Accountability Act that was put into effect July 1st of last year. We haven't really seen, in my opinion, the full effect of what that could mean for the town and for municipalities really generally in Connecticut. I think we're one of the first few states to really kind of enact that legislation. Our neighbors in Massachusetts and Rhode Island and New Hampshire, I think, have yet to follow suit. So we're really kind of in that regard the guinea pigs, and so it'll be interesting to see how that plays out. And then in terms of legislation, I would say that my only other concern is what's going to be happening with COVID cases. And the workers' comp market, again, municipalities have largely been unaffected, but we'll see what the long-term effects are. But for now, in terms of legislation, Police Accountability Act and PTSD coverage for first responders, will basically is that way. It's a great question.
Thank you.
Any other questions? Okay, thank you.
Okay.
Thank
very
you.
much for your time. Let's go there, so nobody can say that they got COVID.
Okay. Yeah,
And again, hopefully the committee is going to be making a recommendation to the town council.
Yeah.
Yeah. Day or two, and let you know what that recommendation is. Thank you, sir.
Okay.
Everyone.
Good to see you again, Bill.
Nice to meet you, Jason.
You're Eagle Scout?
What's that?
Eagle Scout?
Yes, sir.
And my book.
I sneezed into my hand, so I don't want to shake your hand.
I
Right,
think
reading.
Matt Lesser is the chair of the insurance committee for the state legislature.
Yes.
Yeah, he represents Newington.
Oh, no kidding.
So
Wow.
we know him, so
Okay, great. Good to know.
yeah, good.
Thank you. Okay, pleasure.
Thank you.
Take care.
Good to see you, Bill.
Okay, thank you very much.
I'm sorry. Yeah, he's chair of insurance. So.
Anybody have any thoughts or comments? And we only have one, we only have really one to compare to, so it's not like it's a
Right.
compare,
Is the statute saying we need more than one?
No. We have to go out to bid, which we've done,
Right.
and we've gotten one bid, so it's, there is no need to go out for another bid.
Mhm.
We can do that if you like, but I don't see where we get any difference
Right.
and any better rate. If these people we weren't happy with them with their performance, then I would think that even though they're the only bid, we might want to think about a bid, but we're happy with their performance. The rates seem to be reasonable. So I think we should move forward with it tonight, because I don't see we would get any better deal.
No, I
Going back
don't
up.
think you're going to get a better price
Right.
for your services. Again, if you're not happy with the way in which they're performing those services, then you may wish to make a change,
And
but
Lou,
you
you've had
will,
no problem.
you will pay for that privilege.
Yeah, and Jeff, you've had no problem doing it, right?
That is correct. I'm very happy with them.
I gotta say, that's one of the best presentations I've
Yeah,
ever heard.
Yeah.
They seem to be very, very good.
and we've been with them for a long time. I mean,
Yes,
you've
we have
seen
a
Bill.
track record with it,
Yeah.
so, yeah.
I mean, that was better than what they did 7 years ago. And they're
Yeah, I read through the whole package before I came tonight, and I looked at it again, and I'm in the business, and they're clearly up to date on what's going on in the industry, because I read the same trade magazines that they do.
Yeah, right.
And he was discussing the social awards, and they've been labeled shock awards. They're trying to send a message that, when you do something wrong, you're gonna really get whacked. And I was a little bit concerned, did we have enough excess liability coverage? But then I saw we had 25 million, and I think that's reasonable, and they didn't recommend increasing that or reducing it. So
And again, that's a level that this committee recommended decades ago.
yeah.
It hasn't increased, but it is largely due to the school bus fleet. So but it also helps in other areas. If you have a shock claim, you've got something back there to fall back on and cover it. And if you're not relying on 10 million from somebody, and then the town has to come up with the difference.
Right. Yeah, I would recommend, continuing with them and sending it to town council.
I just have a question. Do we have enough coverage for like the school, like if there's a active shooter or something, or town hall?
An active shooter at town hall?
Do we have
No,
enough coverage for anything like that? I mean,
Yeah, that was my
Nothing
question
like
was
that,
about the
no.
active assailant coverage. Is that something we have currently?
No, that is not something that we have currently.
we don't
Yeah,
have
but
that?
again, I'm probably on both the fiduciary coverage, which it does involve your pension plan. And this would be somebody who there have been some suits recently from people who have sued because their pension didn't earn enough money. It only earned 4%.
Yeah.
And they told you it was only earning 4%, and you still didn't do anything about it.
Yeah.
So I'm suing you. And so there have been some of those claims, and so I'm gonna probably ask that we get some pricing for
Well, that's
both those coverages.
That's one area he recommended, that we look at active assailant and the fiduciary, which we don't have now, but we should, I mean, to be good stewards, we should look at that. I think that's,
Unfortunately.
yeah.
yeah,
we should,
right.
yeah.
And if it's only like $7,000, to me, it's a big deal, but in the big scope of things, $7,000 is chicken feed compared to what the claim.
And
Yeah.
and again, on the active assailant, that's to cover the ancillary costs.
The ancillary costs, right.
The basic costs would be covered by the town's policies,
General liability.
and the umbrella would be covering certain things, but there are certain other things such as mental health costs that would not be covered. And that's what this
So
policy.
we're covered for some of it, but we wouldn't be covered for if the other people in the classroom, for instance, who had to have
Counseling.
therapy or
Right.
counseling,
Right.
that would not be covered, and we'd have to provide that.
Mhm.
So that would be, I mean, for the price, if that's the price, the real price, it seems like it's just something we should do, but they can make that recommendation to us in the future. We can decide on that.
Right.
And as I say, I've gotten a request for drone coverage from the police department. The price they got was $73, and if that's all it is, then that's probably hardly even worth bringing to you. But
Write him a check, $73.
but there was a separate unmanned aircraft coverage that we provided for the Aerospace Academy. And that was tailor-made to the education people. And that was the program that Bill was talking about. And we did allow that to lapse because our pilot left. And Kerma's does have coverage, but I need to pull out what sort of coverage it is. I have something in the back of my mind that says it's like the pollution liability. If you file a claim on July 1st, you're okay. If you file a claim on June 1st, policy may be spent.
Yeah.
So we've got to do some digging on that, and so there may be, and also we need to reinstate some coverage for the Board of Education. They have the aerospace program at John Wallace that's continuing, that is covered to a limited extent, but there may be policies out there that are better. So
I think those are areas we should probably explore. I think those are things we should, assailant coverage, the fiduciary coverage.
So it may be more than just a $73 issue is my point.
Right. But I think we should still get the numbers and decide yes or no, but
Right.
it does, to not have the numbers, and to decide now without numbers, it would be silly.
Right.
So.
Right. And that's why I'm not coming to you asking for any questions. We're just gonna keep this very simple and keep it to USI. Do you want them for another 3 years or do you not? And that's the only question for tonight.
Does anybody want to, if we're ready to go forward, we need to read the motion into the record and then second. Sure.
Proposed motion, move that the Standing Insurance Committee recommends to the Newington Town Council that it retain the firm of USI Insurance Services of Meriden as the town's agent of record for the period of July 1st, 2022 through June 30th, 2025, for the fee of $17,500 per year based on their proposal in response to RFP number 4, 2021-22.
Wait a second. Any discussion? All those in favor? Aye. Anyone opposed? Wait a minute.
This is unanimously.
Do you have any other business?
Without any other agencies to.
Well, we could, to be clear, we could go back out. We have that option, but I don't see we're gonna get a better deal, and we already like these people, so.
What's the point if no one bid?
Right, right.
Nobody bid, so,
And
yeah.
if you don't want to bid the first time, they're gonna bid the second time? No, probably not.
Right. And we know them. I mean, Bill's known for years.
Again, I think because their fee is already where it is why other firms have not chosen to try and undercut that.
Right.
So,
But can you explore those other coverages now that we've brought them back up?
Ask them about those other coverages, but they also have to make a recommendation to you to recommend to the town council for insurance coverage for 22, 23.
So now that we've
Okay,
brought
so-
them on, so they'll have to come back to us.
So they're in their option year, if you will. And so they need to present that to you.
Right.
Their term ends, and the current term technically ends on July 1. And so they need to make a recommendation to this committee to place some coverage
Okay,
for that. And then you can move forward.
okay, good.
And I will also ask them to include in that the unmanned aircraft, the cyber liability, the fiduciary coverage, and the active assailant.
Active assailant. Yeah.
Will you list those four in your minutes, please?
Yes, I
So
will.
say again.
Those two fast ones.
Cybersecurity.
Okay.
Fiduciary.
Fiduciary,
um,
active assailant, and
assailant,
Cyber liability,
the unmanned craft.
unmanned.
Yeah.
the fiduciary coverage, the active assailant
Mhm.
coverage, and the unmanned aircraft coverage.
especially like ransomware.
Thank you.
Ransomware.
Yeah. That's
Lock-
crazy.
They lock the whole account and you gotta wire like $1 million.
Yeah. It's found before.
Main town's got it.
Really? Wow.
Company in town.
So when they have some pricing for next year, then we'll be bringing it back before this
Right.
committee.
We'll have
and,
to reconvene then, yeah.
So that'll probably be, there might be a week or so's notice beforehand in order to do that, because the town council will need some time to deliberate and make a
Right.
recommendation.
So it would take us 2 meetings, you know,
Right.
for new business.
And I've received the Chroma information, and Lou has gotten it, and his people have responded back to me. And I just got from the highway department today, their changes to Chroma's coverage, so I'll be able to, in probably Monday or Tuesday, I'll have everything wrapped up, and I can get this off to Chroma. And I'm a little ahead of schedule. Sometimes it's May 10th or so before they get this stuff, so it's a little early.
Oh, yeah.
But nonetheless, it's never too early for them to get back to us with a price and so forth. And because they've got to contact you, Chroma has to contact USI, give them their price, and then USI has to come to you, and then you have to make a recommendation to the council, so.
The sooner the better, I would suggest, given the trends that I've been, following in the industry, claim severity and frequency is up across the board. It's an industry-wide issue since the return of people to the roads. They're driving like there's nobody on the road still.
They forgot how to drive.
So I know we've had a large number of increases in our workers' comp area.
Yeah. And so from the liability standpoint on the automotive, I think we're probably gonna see an increase. I'd be surprised if we didn't. I know I've never looked at the policy before tonight, but we can't, the companies out there can't get enough rate from the insurance commissioners. They just won't approve it. And Travelers itself is just posted their third quarter of auto losses. They haven't made money on their auto business in 3 quarters. So that's really the state of affairs in industry wide.
Well, I think the takeaway that this committee can get is the comment that this is the hardest insurance market since 9/11.
Yeah.
And that's pretty significant.
Yeah, he did. So.
Yeah, it is interesting.
It's going to be tough and expensive.
So, I mean, hopefully it won't be too expensive, but again, I don't know. I mean, our budgets have already been submitted, so.
Our budget's already set, yeah.
If additional funds are needed, then
We'll have to figure it out someplace.
figure it out, so. All right, I don't have any other business.
Any other business we have to bring up? Any public participation?
On Zoom?
Anybody show up in the meantime? So then we can look for a motion to adjourn or comments from members. Any members have any comments?
Good meeting.
I'd just like to thank the other members. I can't remember your name.
David.
David, no, thank you for your
You're welcome.
comments.
And the motion's on to adjourn.
Moved.
All those in favor? Anybody opposed to adjourning? There never is.
Is he out there?
I think so.
Oh, okay. Oh, okay.
Deciding what the time would be.
Yeah, but I think we do need the activists.